Hello, everybody, and welcome to the 55th edition of LM's Weekly Wrap, our weekly program to cover the developments relating to the markets. I think this week has been a kind of a roller coaster week for the markets as we move into the earnings season. As the first round of the earnings season gets over, where we've seen a lot of numbers, prominent companies, sectors declare their numbers. We've seen the IT sector declare its numbers, and it's been a roller coaster ride in the IT space as well as a few other sectors where we thought that markets are likely, these companies are likely to perform well, and in some cases they have not been able to match up to the expectations. So a few companies have declared very stellar set of numbers. So we'll come to all those factors in our sectoral roundup. The global scenario continues to be stable, and for more insights on the global markets as well as the domestic markets, I am joined by Jash. Jash, welcome to the show.
Thank you,
and
sir.
Kindly take us ahead.
Thank you. It's great to be back. Nifty remain to be on record levels. We saw last week that it had broken records. This week also they broke records. Yesterday it was a high, all-time high. Today we are seeing slight pressure on Nifty, especially after the whole Reliance Jio demerger that happened. So all in all, I think this demerger has been taken very positively by the market. Reliance has driven the index upwards, and today it has been in pressure because the whole demerger got over yesterday, and even Infosys, the result was declared, and we see some pressure from the IT side. More light will be thrown by Nirav sir, but this is basically how Nifty and Sensex are faring. Coming to the global markets, I think things have been quite quiet in the last 1 week. There's not a lot of noise as the inflation had gone below 3% in US, and UK also is seeing control on the inflation. I think whatever comments that were made before that, we need to be hawkish, dovish for the interest rate, for the Fed, for the interest rates. They're not wrong on their part, but any economy generally gives 6 to 8 months for the interest rate hikes or the cuts to take effect, and that is exactly how it has happened. 6-8 months ago they had started cutting rates, and we are seeing the effect right now. So there is always a time lapse that is there, and we need to wait and watch. It just doesn't happen overnight. So this will definitely create some kind of pause in the US and other global markets for the rate hike, and India has already paused it, and India will continue to remain at the same levels for another few months. I don't see India cutting rates anytime before next year because India is in a sweet position, but India cannot act unless and until the global markets have acted to a certain extent. Coming to China is in a very interesting spot. I would say that they have been giving interest rate cuts because the growth is in question. They have been growing very fast, so maintaining the same growth is difficult. So that is the problem that that's a whole different issue over there. But that in the hindsight, the commodity price that went off has been blessing in disguise for India. Coming to the Indian economy today, I'm going to talk on a very much on a macro level on what is driving the economy. I think I'm going to be talking slightly different this time, more on the macro side, why the economy is prospering. So if we go to see India, is the demographics are very suitable and favorable. There's a higher disposable income in the hands of the youth, and they are driving the expense. You go to see the premiumization, the modernization. People want more premium stuff. That is what is driving the consumption. You go to see cinemas, they are completely full. You go to see travel, tourism, all the hotel stocks are doing very well, as it has been rightly pointed in the themes. So this is exactly how the whole economy is running, and this will create some kind of robust environment for our country, and that is why the markets are going up and above. Of course, they are stretched, but there is a reason behind that. We should wait for some time for the results to come out. That will give more clarity on the direction of the market in the coming few months. That's it from my side. I will hand over to Nirav sir for some more meaningful insight on the sectoral performances.
Thank you, Jash. So yes, as rightly pointed out, global markets have been largely muted. I think this earnings season was off to a very quiet start. We had IT companies, TCS and HCL Technologies declaring their numbers, and the results were largely in line with the muted estimates. But I think the real problem started where Infosys declared its numbers yesterday, and there was a trimming of the annual growth guidance. Now, this trimming of the annual growth guidance has been taken very negatively by the markets. What has been explained by Infosys is that certain deals got delayed because the whole deal making process, the process of announcing the deals or putting the deals in shape is taking some time, because most of the corporates in US and the European markets, they have gone into a cost optimization mode. So they are preferring to do those deals where there is a cost optimization element involved. But discretionary spending has taken a back seat, and all the deals relating to discretionary spending have been deferred for the time being. So this is impacting the announcement of new deals as far as the Indian IT space is concerned. So this has impacted Infosys, and we've seen that the stock yesterday, the company declaring its results, and while they have been able to maintain their margins, they have been able to give a constant guidance with respect to the margins. They'll be able to hold on to the margins, but it's the revenue cut, the guidance relating to the revenues which has been cut, has really put the analysts on a very negative stance as far as the stock is concerned. So the stock was down in trade today. It was down about 8% in trade today. At the same time, we saw HUL also declaring a dull set of numbers, while they also were able to hold on to their margins, but the body language, the commentary was really negative. HUL has also indicated that the ground reality continues to be a little bit difficult as far as the home care segment is concerned. It continues to do well, but it's been the beauty and the personal care segment where they are struggling. For example, in the detergents and soaps, they have had to take some price cuts. There is some amount of under trading which is happening as far as the consumers are concerned. The competitive intensity is going up severely, and as far as the media intensity is concerned, as far as the competitive intensity overall, the smaller players are trying to grab market share. The consumers are preferring to go in for loose tea as compared to the packaged tea. So all these things which have been highlighted by HUL is also pointing out a negative scenario as far as the FMCG space is concerned. So the stock was down in trade today. It was also one of the biggest losers. The third important result, that is relating to the cement sector, that is Dalmia Bharat. Dalmia Bharat is the lowest cost producer in the country. It takes credit for that, and it is very important to see what was the quality of the margins of this company. So they have also indicated that volumes, while the volume growth was good, the realizations were under pressure, and there was also the cost pressures which continue to persist. For example, the raw material prices as well as the logistics cost have been inching upwards during this quarter. So this essentially, again, the results have disappointed as far as Dalmia Bharat is concerned. Now today, Ultratech Cement has also announced a set of numbers. The numbers look okay, but I think the stock has managed to hold on to its valuations as far as today's trade is concerned. Now, apart from this, today we will be having the numbers of Reliance Industries, and it's expected to be a mixed quarter. And I think after yesterday's Geo Financial Services price discovery, the stock has become a little bit weak. It was nervous ahead of the quarterly results, which are scheduled to be announced today. Now, what is helping the market is that while some of these sectors have been drifting downwards, like for example, IT sector has been drifting downwards, we are seeing some very positive cues as far as the banking space is concerned. Ahead of the quarterly numbers which are scheduled tomorrow, I think Kotak Mahindra Bank, ICICI Bank, they were in good form in the markets today. So we expect a good set of numbers, and hopefully these should be able to help protect the market from further fall. Next week on Tuesday, we have the results of Larsen and Toubro, and it has indicated that it's likely to consider a buyback. And considering the fact that the infra story has been going very, very strong, I think LMT was up in trade today. So we are seeing very, very diverse moves as far as the markets are concerned. Some sectors are down absolutely in the dumps. Some sectors continue to do well. And I think the next week is going to be very, very critical from a result perspective also, and as well as the total market perspective. Now, what is the final comments, because time paucity is there. I think what is going to be the factors to watch out for as far as the Indian economy is concerned. Two important factors to watch out for. One is the unseasonal rains. That is the uneven rainfall across the country. We had a delayed start to the monsoon. Secondly, we have had an uneven distribution of rainfall, and we are having very erratic pattern of rainfall. When it rains very, very heavily, causing damage to the crops. So this is something which we'll have to watch out for. This is also a result of the El Nino factor. This is one. Then the second factor to watch out for is the global uncertainties or the global adversity which is going on. Now, in this particular context, we would like to point out one thing, that Russia has ended the grain deal which it had entered into with the rest of the world regarding the supply of grain, allowing the supplies of grain from the Black Sea. They were not permitting Ukraine to supply grains, foodstuff to the rest of the world. It's important to take into account the fact that Ukraine is the breadbasket of Europe. They've been supplying wheat, corn, soybean, and all other essential commodities to the rest of the world from the Black Sea. Now, exactly after 1 year, Russia has violated this agreement, and they are no longer permitting the supplies to pass through the Black Sea, which makes it very difficult logistically to transport these food grains and other food stuff. As a result of this, the food security is again being threatened, and the food prices have started inching up across the globe. In fact, they have started moving up very, very sharply. So this could have a very, very damaging impact on the world. If food prices go up, then we will start seeing crude oil prices also start going up, and again the world will be in the grip of inflation. It could even be hyperinflation. So this is something which I think India also needs to guard against, although it does not impact us directly, but indirectly definitely it impacts us in a very, very strong way. So these are couple of factors which we need to watch out for. That is the global developments and the erratic pattern of rainfall which we are seeing in the country. Rest, I think the story continues to be strong, and of course markets, we'll have to see how the results play out going forward. Lot of things to discuss, but we'll be back next week with more results and more insights from our side. That's about all from my side. I now hand over to Jash for the closing comments.
Thank you, sir. It was great listening to all the insight from Nirav, sir. And if you'd like to hear more, please like, share, and subscribe. Please press the bell icon underneath the video, and we'll see you next week. Thank you.
Thank you.